Morning, everyone, and thank you for joining us. I'm really excited to be here with you today to share some amazing news. Now, as I'm sure you've already heard, as of October 1st, Ontario Realtors will be able to form personal real estate corporations. This is a huge win for our profession, and I could not be more proud to be your president as we welcome this much needed and well-deserved business tool to realtors across Ontario. Before we get started, I want those tuning in to know that your provincial association has left no stone unturned when it comes to PRECs and gathering the materials and resources to support you. AREA has assembled a team of lawyers, accountants, and real estate experts to not only prepare this webinar for you today, but also to provide you with the materials that are now available on area.com/PRECs. Now, you won't get this information anywhere else. Only AREA has done the deep analysis that comes from knowing the people and officials who drafted these regulations. I encourage members to go to the website after this webinar to review all the materials that AREA has created for you. Today, I'm joined by AREA CEO Tim Hudak and Government Relations Chair Mike Stalls. Here's what we're going to cover. First, we're going to share our journey on how we achieved this historic advocacy win. Second, we're going to be reviewing the new PREC rules and regulations at a high level. Third, we'll highlight what forming PRECs actually means, outlining some of the advantages of forming a PREC, as well as the costs and challenges. And finally, at the end of the webinar, we will get to answering your questions. Now, you can type your questions into the question box of the webinar, and at the end of the discussion, our moderator will pose your questions to our experts. Joining us today are members of our expert team, including David Tang, partner at Miller & Thompson, and Joseph Paliroli, tax partner with KPMG. David has over 30 years of legal experience, including 5 as external counsel to AREA. He has supported AREA with legal advice through our review of REBA and was integral to supporting the drafting of key components of the new Trust in Real Estate Services Act. Joseph has over 12 years with KPMG and specializes in tax advice for Canadian-controlled corporations. KPMG has supported AREA on PRECs since 2014, conducting several analyses and providing ongoing advice. On behalf of AREA, I want to take the opportunity to thank David and Joseph for their tireless work on this issue, and I thank them for joining us here today. Our win on PRECs is yet another advocacy win for your provincial association and a restatement of the power of the realtor voice. It follows a string of victories for realtors in the last 5 years. In 2015, we passed electronic signatures, which has revolutionized transactions. In the same year, we stopped the spread of a $1 billion municipal land transfer tax, protecting the dream of homeownership for future generations. In 2016, we doubled the land transfer tax rebate for first-time homebuyers from $2,000 to $4,000. The next year, we protected the exemption for real estate brokerages in the Employment Standards Act, saving thousands in employment costs. In 2018, we put the final nail in the coffin of mandatory home energy audits for a second time, which would have created a giant piece of red tape for Ontario's homeowners, delaying transactions and hurting folks like seniors who rely on hard-earned home equity for their retirement. Just last year, we worked to help to pass the More Homes, More Choice Act, the most pro-home ownership housing supply legislation in over 10 years. And finally, according to AREA's research, PRECs will save or help members defer over $14 million annually in taxes. That's money that members can invest in their business, helping them offer better services to their clients and hire more staff. All of these changes have helped you do business better, protected our profession, made homeownership more affordable, and strengthened Ontario's real estate market. Now that's what I call good return on investment of your $110 in AREA dues annually, which amounts to just 35 cents a day. But as I look back on all the work that happened on TRESSA, I'm truly amazed how far we've come.
It has definitely been a journey, Sean. For the past 10 years, AREA has been lobbying to bring about changes to what is formerly known as the Real Estate and Business Brokers Act, or REBA as we commonly know it. Each year, 200,000 real estate transactions involving close to 500,000 consumers are completed in Ontario. No government rule or new piece of red tape can replace the protections offered by a highly trained realtor working with a well-informed consumer who is in control of the transaction. With a much-needed review of REBA, REA wanted to ensure that Ontario was a leader in North America when it came to real estate standards. Since 2009, our members have had over 750 meetings with local MPPs. We have sent over 50,000 emails related to REBA reform, and we have supported 4 different private members' bills on personal real estate corporations alone. But our advocacy didn't stop there. In 2017, REA created a REBA review task force in order to lead the largest direct-to-member consultation in REA's history. Over 2 years, the consultation gathered 4,000 pieces of member feedback, reviewed over 50 policy proposals, and generated 4 white papers and 2 final submissions related to modernizing the regulations that govern our members. All of this hard work culminated in November 2019, when REA welcomed Premier Doug Ford and Minister Lisa Thompson to our Ontario Realtor Party conference. At the conference, Minister Thompson announced that she would be introducing the Trust in Real Estate Services Act. TRESSA included over 20 REA recommendations, including personal real estate corporations. From stopping a ban on multiple representation to strengthening the real estate discipline system, REA saw all aspects of our advocacy work reflected in the new North American leading real estate legislation. As part of the conference, board delegates joined REA at Queen's Park to witness the introduction of TRESSA. Our presence was felt as the entire gallery was filled with realtors in support of TRESSA. On February 27, 2020, TRESSA passed third and final reading in the Ontario Legislature with all party support. The legislation received 91 votes in favor, 0 against. Weeks later, on March 4th, 2020, TRESSA received royal proclamation, becoming the new governing legislation for real estate professionals across Ontario. While the new act was in place, in order for many of the new provisions under TRESSA to take effect, the Government of Ontario must now create the supporting regulations. REA wanted to ensure that the Government of Ontario prioritized the creation of supporting regulations for PRECs following the passage of TRESSA. Over the summer, REA worked tirelessly in support of the government to develop the new regulations for PRECs. Our work was guided by 3 principles. First, the Ontario model should offer strong protection to consumers. Second, it should maximize the financial benefit to our members. And third, it should minimize administrative burden. To design the best regulation, we studied existing models in provinces across the country. We looked at other industries and the benefits that they had with professional corporations. And we consulted with our experts to ensure that the Ontario model would provide the greatest benefits to our members. In the end, REA was successful in working with the province to create a modern regulation that delivers generous benefits to members while maintaining strong protections for real estate consumers. In fact, the model permitted under Ontario's regulation is the gold standard compared to other professions in Ontario and other personal real estate corporation models in other provinces. Realtors have advantages under this regulation that lawyers, accountants, and others do not. So we should be very proud. It is an exciting time to be in real estate, and the introduction of personal real estate corporations will continue to strengthen our profession. I want to thank each and every one of you for your support and dedication to making this advocacy win a reality. I will now hand it over to our CEO, Tim Hudak, who will be discussing some of the key aspects related to forming your own PREC.
Well, thank you, Mike and Sean. Folks, I'm very pleased to be speaking with you here today to share the overview of exactly how personal real estate corporations in Ontario are going to work, how they're structured under all these new regulations. Many professionals in Ontario are permitted to form personal corporations. Dentists, doctors, lawyers, accountants, mortgage brokers, you know the list. Realtors never could. And many of these professionals are high income earners, so they choose to incorporate their business and take advantage of the tax benefits of incorporation. But there are many real estate professionals in Ontario that similarly are doing well and would face a massive tax burden. It was simply a matter of fairness for realtors to be offered the ability to structure their business under a professional corporation model, considering the vital work that you do to support Ontario's 3 million homeowners with the biggest purchase of their lives. What you do every day has a huge impact on the community. So we fought hard to make sure that realtors could be incorporated finally in Ontario. And we get it. As self-employed individuals, it can be difficult to achieve long-term financial stability and then planning a retirement with all the ups and downs in the market. That is exactly why AREA fought so hard to make sure that our members could take advantage of this important business tool. And in fact, as you'll see, we got you the gold standard when it comes to professional incorporation compared to so many other professions here in our province and our fellow realtors in other provinces. So watch this and you'll decide. I mean, forming a PREC might be very appealing to many of you. However, there will be a lot for you to think about before you decide to form a PREC. So listen through. While AREA is here to support you in understanding the new regulations of what is and what is not permitted under the PREC model in Ontario, I do have to say it is going to be super important that we can't tell you how to do the business. PRECs are a great tool, but they are not one size fits all. You've got to use your best judgment if and when forming a PREC is going to be the right move for you and for your business. If you'd like to learn more about how PRECs could be advantageous to your personal business situation and your circumstances, you really got to talk to your financial advisor, your lawyer, your tax advisor. We strongly recommend it to decide if incorporation is right for you and exactly how your PREC and other arrangements should be structured. Can't stress it enough. Each one is going to be slightly different depending on your circumstances, your age, how much income you're making. Let me give you some examples here. Here's what we're going to talk about today. We're going to be reviewing the new PREC rules and regulations at a very high level. We'll also highlight what forming a PREC actually means. What does it mean practically? Next, we will outline some of the advantages of forming a PREC, why you should do it if it works for you. And then we'll provide some of the potential costs and risks associated with forming PRECs. And of course, at the end, we have experts here, as well as Sean, Mike, and I, to answer your questions. A recording of this webinar, along with all the information and resources discussed here today, that's going to be available on our website, area.com/precs. So it'll all be there to check out later on. Okay, let me first give you an overview of what is in the new PREC regulation. As you know, TRESSA, that's our new legislation, it prohibits anyone from trading in real estate or receiving compensation from a trade in real estate unless you are a registrant with RICO. You know that. Previously, most registrants, salespersons, and brokers who did not work for their own brokerages would receive compensation for a trade in real estate personally. You couldn't put it into a corporation. So PRECs are going to be a new exception. So under TRESSA, PRECs are an exception that will allow your compensation from a trade in real estate to be paid to your PREC, not you individually. But your PREC has to meet all the rules that are applicable to them. Those rules governing PRECs are set out both in TRESSA and in the new regulations the province put out on October 1st of this year. The regulations I mentioned, they will allow you to receive income from trading in real estate in a corporation instead of that money being payable only to you as an individual. So what does that mean? Well, it's going to give you a whole bunch of tax planning benefits and opportunities depending on your circumstances. The PREC regulation sets out rules about how a PREC may be structured. First, the PREC must be incorporated or continued under the Business Corporations Act. For many of you who may already have an existing corporation, you do not need to set up a brand new corporation. AREA fought for that. We won that battle. So that will mean you have more flexibility and cost savings because you can fold it in, something we particularly went to bat for. The most important rules out of the regulations are designed to ensure that the PREC is completely and solely controlled by one registrant, you. Your corporation, you run it. By tying each PREC to one and only one registrant, the PREC regulation allows the province to avoid adding in an extra layer of registration requirements for each and every PREC. So we're saving you costs, we're saving you hoops to jump through. This means that a PREC that meets the regulatory requirements do not need to register with RICO. Again, something REA fought for, another one that we won. There will be no need to apply for or pay additional licensing fees for or keep a PREC separately registered with RICO. Got it? So that's good when it comes to red tape and additional costs. However, you as a registrant will still be required to be compliant with all of your ethical obligations enforced by RICO. The PREC will be entitled to receive the compensation for trade in real estate, but effectively, it will be transparent to the regulator and your clients. No separate registration, no separate fees, and they'll be dealing with you, it feels like, and not the corporation. The regulations use the term controlling shareholder, who must be a registrant with RICO. Again, you, a salesperson or broker. This concept is really one of a controlling registrant because the regulations require that registered salespersons or brokers hold all of the important roles in the corporation so that she or he is the sole officer, sole director, and owns all the voting equity shares in the PREC. Got it? You're the boss. You'd run the show. You cannot delegate control of the PREC. For example, registrants are prohibited from entering into a shareholder agreement that would limit control of the sole officer or director or in any way delegate control of the PREC to any shareholders of the corporation. The only other people who can own shares in your PREC are family members. That's good. Shares of family members can only be non-voting, non-equity shares. So they can't call the shots, but they can own shares. The province agreed with the REA's request. We convinced them that family members can be defined broadly, not only spouses and children, including stepchildren, but also we got in there parents who might require economic support from you today or down the road. We will cover more of this and exactly how family members are defined a bit later in the presentation. In order to remain exempt under TRESSA and receive compensation from a trade in real estate, the PREC must ensure that some specific criteria are met. I'll walk through those. Number one, the controlling registrant is employed by a brokerage to trade in real estate. Number two, the PREC does not carry on business of trading in real estate. It's you, it's not the PREC that trades. The PREC cannot advertise that it trades in real estate, and the PREC cannot directly receive compensation for trading in real estate itself. And here's the important part, other than providing the services of the controlling registrant to be employed by a brokerage. Number three, the PREC is not a brokerage. And four, there is a written agreement in place between the controlling registrant, again you, the PREC, and the brokerage governing the relationship between parties containing provisions which meet all of the requirements. When you do that, the employing brokerage is then permitted to pay remuneration earned by the controlling registrant to the PREC, which would have otherwise been paid to the controlling registrant. There are a number of requirements of the brokerage, including a requirement that it confirm in writing that the PREC is exempt from making such payments. You should probably speak with your brokerage in advance to ensure they are willing to work with the PREC model. The brokerage is prohibited from paying the PREC any more than the amount of remuneration received from the brokerage on behalf of the controlling registrant. The overall result of these provisions is the system allows RICO to continue to deal with registrants exactly the same way it always has, since the PREC will be effectively an invisible or transparent entity to your clients. Again, you follow those rules, less red tape when dealing with RICO, and you wouldn't have to register the PREC with RICO. RICO will need to know about any PREC arrangements before the PREC is permitted to receive compensation from a trade in real estate. The controlling registrant is required to provide written notice to the registrar of his or her name, plus the legal name and address of the PREC, and provide an update within 5 days if that information changes. To provide written notice to RICO on the legal name and address of your PREC, you send an email to them at registration@reco.on.ca. Okay, so how can we use PRECs? Well, OREA asks the ministry to provide as much flexibility as possible in how members can use PRECs. More advanced business and tax planning options are available under these regulations as a result. For example, you can use holding corporations to hold the controlling registrant's equity shares or to hold the family member's non-equity shares separately. And that will provide greater flexibility in allocating the funds within your PREC in a tax-efficient way. You are also permitted to create trusts for minor children's shares. PRECs are not limited either to only trading in real estate. Get this is a big win. PRECs are permitted to host other business activities unrelated to trading in real estate, and both passive investments or more active ones like owning real estate, you can have in your PREC to generate further income or capital gains. These more advanced businesses and tax planning options will not be within the scope of this webinar. That's just too much to throw at you, and it's going to depend on the situation. So I'll say again, great tools to have. This is a gold plate model when it comes to incorporation compared to other professions. It's top of line up there with the doctors. But always talk to your tax advisor, since making the wrong decision, that can not only eliminate any tax benefit you're looking for, but possibly you can see even higher taxes as a result. So talk to your tax advisor about these tools. Before I get into some of the advantages of forming a PREC, I want to get back to the basics. All right. So, what is this animal we're calling a PREC? Well, when you form a PREC, you're creating a legal corporation. And in the law, that's like a separate person, a separate entity. This corporation will be responsible for making you available to provide your real estate services and be the business that receives the money for these services in most cases. As the realtor, you'll be the controlling registrant of the corporation. You run it. However, your PREC will independently earn income. It will pay tax. It will pay tax at a different tax rate than you because it's a corporation. This means that the brokerage you work with will begin paying the remuneration, how much you get from the commission, directly to your PREC instead of you, for tax benefit purposes and other options. Your personal real estate corporation, or PREC, will be a legal entity that is separate from you as a realtor. It will receive income, it will pay expenses, it will owe taxes, it pays taxes, and you have to file its own tax return for the PREC. You as the realtor will create the corporation. You as a controlling registrant, the sole director, the sole officer of the PREC, will make all decisions regarding the corporation. Nobody else. You will be responsible for the actions of the corporation. You will also make the decisions about how much money the PREC will pay to you personally as a salary, or to you personally as dividends, or a mix of both. You will also decide whether dividends or other payments can go to family members, your spouse, your kids, your parents, who may own non-voting, non-equity shares in the PREC. There are options related to things like pension contributions, RRSPs, unemployment insurance premiums, a lot of benefits here. But your lawyer and your accountant will explain if that's going to work for your situation. So when you begin thinking about whether forming a PREC is the right decision for you, I want you to think through the following questions. Are you currently earning more than what you need to meet your daily living expenses? You got a few extra dollars coming in that you don't need. Do you want to be able to save more money for your eventual retirement? Could it be a benefit to you to distribute business income to your family members? Down the road, are you considering passing on your business to a family member who is a realtor? Another thing to think about, are you thinking about down the road selling your business to another realtor? And also, is there a benefit to leaving business income in your PREC? Finally, you got to think through, where are you in your professional journey? Are you just getting started? Are you heading towards retirement? Or are you somewhere in the middle? Those are the big questions, and there's going to be more. But that will help you think through whether forming a PREC is going to work for you, and whether that timing is now or later on. If you're making significantly more than what you currently need to meet your daily living expenses, if you have family members who pay lower income taxes and could benefit from distributing income made from trading in real estate to your family members, if that works for you, and particularly if you've been in business for many years, forming a PREC might make sense for you. But if you're just starting off in real estate, you're making maybe the right amount of money just to pay your daily costs, well, then maybe forming a PREC is something you want to hold off on until things get better for you. Again, this isn't black and white. A lot of it's going to depend on many factors. So let me say, talk to your financial advisor, talk to your accountant, and talk to your lawyer. They've done this with other professions, so they'll know how this works. But think it through to decide if incorporating using a PREC is the right business decision for you at the right time. So now that you have an understanding of what exactly a PREC means and how to form it, I want to talk to you about some of the advantages of forming a PREC. So what would make a person, a realtor, decide to form a personal real estate corporation? Well, the two big ones, the most significant benefits for the use of a PREC are, number one, tax deferral. Why is that? Well, the corporate tax rates are a lot lower than personal income tax rates. So you'd benefit from that differential. And number two, the possibility of taking advantage of the lifetime capital gains exemption for qualified small businesses. So over time, you wouldn't have to pay taxes on those capital gains. Getting some details here. In Ontario, the corporate tax rate is 12.5% on the first $500,000 of income, a lot lower than you pay personally, right? So any income above $500,000 then is taxed at the general corporate tax rate of 26.5%. Compare that to personal income. The highest personal tax rate in Ontario is 53.3% on every dollar over 220. Take more than half. So you can see the benefit if you're in that income earning envelope. Forming a PREC gives you the option of leaving a portion of your business income in your PREC, and that means paying the taxes down the road and deferring that big tax bite. I think what's going to be helpful here is I'm going to give you two models that will illustrate the tax structure of forming a PREC at different income levels. Now, there's a lot of numbers in here, but I think you'll get the general point. The numbers are generic, these examples we just made up, but I think they'll help describe, two types of realtors. Always get professional tax advice before you do the PREC. In these examples, we're going to assume that a salesperson's annual operating expenses are approximately 19-21% of their total revenue. Hopefully that's fair. Okay, person number one. Mr. Amir is a real estate salesperson who's watching the webinar, and he says, well, maybe I'm going to open up my own PREC. Mr. Amir earns $200,000, okay? $200,000 of self-employment income as a sole proprietor. So $200K coming in, real estate trades or whatever. Mr. Amir's operating expenses are $46,000 a year, and he requires $90,000 in after-tax cash per year to fund his lifestyle. His rent, his food, going out. Mr. Amir also contributes a maximum allowed to his registered retirement savings plan, his RSP. He's a saver. That number, $27,230. In order to create the maximum RSP contribution, Mr. Amir will need to earn income of at least $152,000. In this example, Mr. Amir is single, he's a resident of Ontario, and he has no other sources of income other than what he makes as a real estate salesperson. Mr. Amir's PREC benefits from the corporate small business rate. Okay, a lot of numbers. Is it advantageous in this example for Mr. Amir to incorporate a PREC? Well, when you go through the calculations, if Mr. Amir incorporates, he'll be left with $1,750 in after-tax corporate cash in the PREC, $1,750. That is compared to $770 of after-tax cash he would have if he did not incorporate. So for Mr. Amir, forming a PREC would only leave him an additional $1,020 in his PREC. Quite frankly, in Mr. Amir's example, the cost of incorporating a PREC and the additional tax compliance will outweigh the benefit of the tax deferral. Just too much extra cost there for that much of a difference. So it would not be advantageous at all for Mr. Mir to incorporate. It's not for everybody. Let me give you another example. Ms. Lee. Ms. Lee is a competitor of Mr. Amir. She's a real estate salesperson. She's looking at the PREC. She's watching right now. And Ms. Lee makes $250,000. Again, self-employment income as a real estate salesperson. Her direct operating expenses are $52,000 per year, and she requires $90,000. Okay, same sort of story. That's after tax to fund her lifestyle. Ms. Lee also contributes a maximum allowed to her RSP. And in order to create the maximum RSP, same as example, Mr. Mir, she needs earned income of at least $152,000. Ms. Lee is single. She's a resident of Ontario. No other income coming in other than what she does as a salesperson. And her PREC will benefit from the corporate small business tax rate. So in this case, is it advantageous for Ms. Lee to incorporate a PREC? Well, her PREC will give her $40,250 in after-tax corporate cash that she can invest. If she didn't do it, she'd have about $25,000 in after-tax income if she did not incorporate. The difference? It leaves her with $15,480 available in her PREC. That's pretty good. Since Ms. Lee only needs $90,000 of after-tax personal cash to fund her lifestyle, it makes sense for her to do a PREC. There are tax advantages there. Okay, we'll go on with it. The other big change, the other big gain from this, aside from the tax differential, is a lifetime capital gains exemption. So when you dispose of your shares of the PREC, when you sell it down the road, you may be able to do that with respect to some or all of any increased value without paying any tax on that capital gain. That's what they call the lifetime capital gains exemption. It's currently set at $883,000. It'll probably go up over time with inflation. So a PREC could give you and your tax advisors opportunities for tax savings and planning. There are too many variables for us to show you a single example here, but you can see how it could accumulate in your PREC, and at the time of retirement, you can bring that back with major tax advantages. Again, talk it over with your lawyer, with your accountants, but it's a pretty good option that did not exist before for realtors. The Ontario PREC rules also give you extra opportunities to distribute business income from trading in real estate among family members. You talk to your tax advisor, but this could be really beneficial as an income tax strategy for a family. You know the term, right? It's often called income splitting. For example, the PREC may wish to pay dividends to family members who are given ownership of non-voting, non-equity shares. I told you that earlier. You're the equity share. You're the one that runs it as a realtor, but your family can have non-voting, non-equity shares. Talk to an income tax professional, but you might want to pay them dividends out of the PREC. It's important to recognize this is not a tool that all professionals in Ontario have. Lawyers and accountants don't have this. But Sean and Mike and the AREA team, we went to the mat and made sure that income splitting was available for our realtor members. Make sure it works for you, but it's a nice advantage and gets us up to that gold standard across the province. Okay, so I talked about the family. So who exactly from the family can benefit from this? There are three major categories of family members under the rules. Obviously, number one, children. Children can benefit. AREA, though, said, let's recognize the modern family, that blended families were treated the same way. So the regulations define a child as including any individual who you have a settled intention to treat as a child. What does that mean? Well, that's stepchildren, that's adopted children. It's children of a common law relationship. We even got a specific exemption for foster home situations. So you can give dividends to the kids, the broadest category available. The number two category, also obvious, is spouse. Okay, so under the regulations, a spouse can include an individual whom you're legally married to or with whom you are in a common law relationship. The third category that we got results in good GR work. Our members may wish to support their parents as well. That makes sense in this day and age. So the definition maintains a flexible interpretation found in the definition of children, allowing anyone who demonstrated a settled intention to treat you, the controlling registrant, as a child to own those shares. So a broad definition of parents included, that you can pay dividends to. Remember, your PREC will also be permitted to make family members employees of your business, so you can pay them. So they can receive remuneration for their work in addition to receiving dividends. That's a great benefit to have that not everybody else has too. Now, determining the appropriate mix of payments to family members, dividends, how much they have to work, all of that, it's pretty complicated. So talk that over with your tax advisor. Do so very carefully, get advice from a lawyer or accountant, but at least that tool is in the real estate salesperson's toolbox now, and other professions don't have that. Not only can doing this incorrectly not achieve tax savings, it can potentially increase your tax burden if you don't do it right. One more time, talk to the income tax professionals. All right, you're wondering, do you have to pay separate licensing fees? I get it. You probably think that is the case. But as I said earlier, the Ontario PREC rules will not require dual registration of yourself and your PREC. You will only need to be registered yourself. Provided you meet the rules and regulations, your PREC will be exempt from that requirement. So you don't have to pay additional licensing fees to RICO. I got to tell you, this approach is different than what realtors have in other places like British Columbia and Nova Scotia. They've actually get hit twice. Their personal real estate corporation has to be separately registered and pay separate fees. We work with RICO in the province. You don't have to do that. REA worked with RICO to avoid this kind of dual registration model, and that cuts a lot of red tape for you. As a result, there will be no need for a separate application or registration process for your new PREC. No ongoing licensing fees need to be paid annually by your PREC. That doesn't mean there won't be other fees. Forming a corporation will require legal and other incorporation costs. That's just the way it is with incorporation. There may be additional administration for your real estate business and your PREC, and that may increase costs. It is important to remember that your PREC will be a separate entity from you as a real estate professional. So what does that mean? Well, the PREC has to file a separate income tax return for your corporation, for example. There may be additional tax filings like HST. You'll also be required to file an annual corporate return that's different from your personal annual return. Many professionals who firm up personal corporations today, doctors and lawyers and such, well, they tend to hire an accountant to set up their accounting processes, to file their tax returns for them, because it can be complicated. Accountants will also give you advice on how business income should be distributed year to year for your long-term planning or supporting family members. In addition, you might incur legal costs when you initially incorporate to set it all up from the beginning, to maintain your status annually, to file your corporate tax return. So think of all that. Your lawyer may also be needed to advise you on your PREC's agreement with your brokerage. Remember I talked about that earlier? And how you structure and implement any of the tax or other business advantages that the PREC brings, including any other businesses, activities, or investments that you want to keep carrying out and put it within the PREC, like buying real estate. Or if you want to set up holding companies for tax advantages, your lawyer will charge you a fee for that. Most of you will need legal and accounting advice on whether to proceed and how to best set up your PREC, and payments will be part of an overall comprehensive tax plan. But with the additional options available under the PREC model, of course, there's going to be additional complexity, and you need professional assistance with that. But the tools are there. Here's some good news. There is no mandatory form of name that you must use. You can call your PREC whatever you want. In British Columbia, for example, they don't have that. If they form a PREC, it would need to be named, well, the Tim Hudak Personal Real Estate Corporation, if I did that. In Ontario, you're permitted to name your corporation anything you like, so long as that name and address of your PREC go into RICO for tracking purposes. How to name the PREC is a business decision to be made by the controlling registrant at the time of setting up the corporation. In choosing a name, you should remember that in order to remain exempt from registration, the PREC, its controlling registrant, you and others, cannot tell the public that the PREC itself trades in real estate. That's right against the rules. Finally, many of you watching might be wondering about how forming a PREC might impact your professional liability. Well, you will remain liable, of course, for the services you provide to Ontario's consumers. You will be held accountable by the Real Estate Council of Ontario for any misconduct. That does not change. RICO has provided advice on its requirements, including, amongst other things, its requirements for insurance to deal with liability. REA has worked with RICO in this process, and we want to refer you directly to that advice, and you can find it at rico.on.ca/PRECs-ads. It is always useful to consult with your insurance broker for practical advice about whether your insurance needs change. Depends on how you structure your PREC. If you have other activities like active investments that you're going to be putting into your PREC, so the PREC may not automatically be insured. Depends on your situation. Regardless of whether you structure your business as a PREC or not, you are still subject to all professional and ethical obligations. That does not change. Your duties to RICO, following TRESSA, all of that is not impacted by your PREC. You need to carry on. There's a lot more that we could have covered here today. But with that key aspects of the model I've outlined, I think we got the most important stuff across as you start thinking about forming a PREC. Information about the Ontario PREC model can be found at aria.com/PRECs. That will include a guide to personal real estate corporations, informational videos, an overview of the model, as well as this recording of this webinar if you want to listen to me again. Before we get to questions on the PREC model, I want to first turn it back to President Sean Morrison. He's going to share the new amendments that were brought forward when it comes to advertising. Changes to the TRESSA Code of Ethics that will allow for the use of new terms to describe salespersons and brokers in any public-facing advertisements. Sean, the floor is yours.
Thanks very much, Tim. Now, I know that we've received a lot of questions from members about what new terms they can use in their advertising, their promotional materials, websites, and business cards. So why don't we run through that now? As Tim mentioned, along with the new PREC regulations, the province has brought forward amendments to the TRESSA Code of Ethics to permit the use of new terms to describe Ontario's salespersons and brokers. For brokers, you're now permitted to use the following terms: real estate agent, broker real estate agent, realtor, or realtor broker. The new use of term realtor or realtor broker is limited to those of you who are in good standing with the Canadian Real Estate Association. You must be in good standing with CREA in order to use the term realtor or realtor broker. For salespersons, you're permitted to use the following term: real estate agent, realtor, or realtor salesperson. Again, you must be in good standing with CREA in order to use the term realtor. We will be circulating more information in the next week regarding the new terms. This is another advocacy win that AREA fought hard for. We wanted to ensure that Ontario realtors could promote the realtor brand in their advertising. The realtor trademark is something you should all be proud to stand behind, and we are glad that you will finally be able to use the trademark term in your advertisements. Before I send it back to Tim to start taking your questions, I want to show you a sneak peek of an exciting new virtual event that AREA will be putting on this fall. The upcoming Ontario Realtor Party Speaker Series is a 4-week virtual event featuring some of the top names in Canadian and American politics, including former Prime Minister of Canada, Brian Mulroney. Hear from our speakers every Tuesday at 10 a.m. from October 20th to November 10th. You don't want to miss this exclusive event for AREA members to hear about the political landscape of Canada and the US. Now, AREA members can register for free at ontariorealtorparty.com, so make sure you save your seat today. We'll be right back after this.
Check this out. That's OntarioRealtorParty.com to register. Sign up now to get your online seat for our first ever virtual speaker series.
Welcome back. I got to tell you, I hope you will join us at Ontario Realtor Party Speaker Series. Some great speakers. And as a reminder, it's also free. So our guest speakers are going to have some great insights in the state of politics here in Ontario, Canada, the US-Canadian relationship, what's going on with COVID, and what it all means for your business and real estate. So honest to God, it's an event you don't want to miss. So register, okay? OntarioRealtorParty.com. All right, I'm going to open up the floor for questions. And as I promised, some experts. So we have David Tang, he's a lawyer, partner with Miller Thompson, and Joseph Pagliaroli. He's a tax partner at KPMG on the call to support answering some of the detailed questions. Please keep your questions as general as possible, so our guests' answers will be for information only. Both David and Joseph needs to advise you that their answers are not meant to be legal or accounting opinions or advice, right? They need a lot more details for that. So not relied on for details, but they can give you the general direction. You should always consult with your own lawyer and your own accountant for what's going to work for you in detail. I want to be clear that we will not be able to answer specific questions regarding your business. And if you should form a PREC, that's your call, not ours. We can give you the guidelines. We're here, of course, to help you learn more about how PRECs operate in Ontario. We fought like hell to get them for you. So figure out if it's going to work for you now or down the road. To ask a question, please type out your question in the chat box below. Matthew Thornton, our Vice President of Public Affairs and Communications at REA, he'll be moderating the questions this morning. So again, type out your question in the chat box below. We just have too many people on this call to have them shouted out. All right, let's get started. Matthew, our first question.
Good morning, everyone, and welcome to our webinar this morning. We have over 6,000 realtors on our exclusive member webinar this morning, so we're so glad that you could join us for this exciting presentation and exciting week and day for realtors on October 1st, being able to finally professionally incorporate. My name is Matthew Thornton. I'm the Vice President of Public Affairs and Communications at REA. I'm going to be moderating the Q&A today with our experts. We have a ton of questions coming in through our Q&A channel, so let's jump right into it. Tim, first question is for you. It's about our scenarios, and it comes from Ethan. And Ethan says, my business costs are lower, and I don't need as much for living expenses as you reference. So his question is, how did REA arrive at those assumptions? And if they are different, what is the impact? Tim, over to you.
Yeah, okay. I'll try to be quick. A ton of questions, Ethan. Thanks for the first question on the top. Yeah, those are measuring sticks, right? So we had Ms. Lee, I think she was 250. Mr. Mir was down about 220, and their costs were approximately the same. So she benefited because she had a higher income. So you're asking, could you still benefit from a PREC with a lower income level? Yeah, absolutely. If your costs of doing business are lower, and I've said it a few times earlier, I'll say it one more time now during the Q&A. Talk to your tax advisor, talk to your lawyer, talk to your accountant. There's a lot of things that PREC can do for you on business planning, on savings, on tax benefits. All of it will depend on your unique situation. So yes, if your costs are lower, you can benefit from PREC with lower income levels.
Awesome. Awesome. Thank you, Tim. Okay, next question is back to you. It's on advertising. Comes from Jessie. She loves the change and the ability to use realtor or agent, but she's wondering why we lobbied for it. And are we worried at all about the impact on the realtor brand? Tim, back to you.
Yeah, Jesse, we lobbied for it because realtors wanted it. But 2 years ago, we did consultations with the realtors across the province because REBA was badly out of date. I mean, it was passed in 2002. So we said, what needs to change to catch up with, 2019, 2020? Over 6,000 realtors participated. One of the things they said was salesperson did not truly reflect the importance of the profession, that it was a profession. No, look, a salesperson sold me this tie, a salesperson sold me my shoes, a real estate agent sold me my house. There is a world of difference in what a realtor does on the advice, on the advocacy, on the research, knowing their neighborhoods, keeping their educational skills up, that it is above and beyond what a simple salesperson does. That's why we pushed for it. So we were successful in getting real estate agent in there, as you saw, broker, realtor. And I'll say this too. Realtor is probably the only place I know in my history in Ontario politics, and maybe across Canada, where a copyright term is actually enshrined in legislation. So it protects realtor. It means you have to be in good standing with Korea to use it, but is now actually in provincial regulations. That's an awesome accomplishment. Choose what you want. You get maximum flexibility, but acting on the realtor voice, we wanted to more accurately reflect the profession and give you more choices in your advertisements.
Yeah, big win for the team on that one, Tim. And as you said, we worked very closely with CREA to bring that one forward. So, okay, next question is over to David and Joseph. We're getting a lot of questions about pending transactions and how to sort of manage that within the context of forming a corporation. So the question comes from Anthony, and his question is, I had a very busy summer and fall. Am I able to put through pending transactions, i.e. deals that haven't closed, through my personal corporation that I am about to set up? And David, let's start with you.
Okay, I think what's really helpful for us to understand as we address this issue is it's actually two questions. We're going to assume that what you're really asking about is whether you can do that to benefit from the tax advantage of doing so. And in particular, I think the primary one is the tax deferral of that income advantage that you're looking to achieve. There are two questions. I think the first question is whether doing so constitutes a breach of the Real Estate Business Brokers Act, or what's soon to be TRESSA, the Truth in Real Estate Sales Act, which contains prohibitions against any person who is not a registrant, and a person includes a corporation, by the way, any person who is not a registrant trading in real estate or receiving income from trade in real estate. So that's the first question I think you're really asking. And then I think the second question is whether your new PREC can claim that compensation, which when you think about it is potentially earned before that PREC came into existence, as the PREC's income, and allow that PREC to pay less tax in this taxation year for that compensation than you would personally. So those are really the two questions I think we're really dealing with. So let me do this first. Let's put to bed the question of whether you can get the money into your PREC, because that really doesn't really ultimately matter. There are lots of ways you can make that happen, even if the Canada Revenue Agency takes the position the income was yours personally and had to be reported as personal income. So if you lend the money after you've received it to the PRC, or you invest it in the PRC in exchange for additional shares, that gets the money into the PRC. And you can probably personally direct your brokerage to make that payment directly into the PRC. But the real issue is whether the Canadian Revenue Agency, Canada Revenue Agency, considers that to your personal income, because if it does, you'll still have to pay income tax on it before you can move that money into your PEC, and that makes the exercise somewhat pointless.
Yeah, and we should also say that RICO is very much aware of this question, and they are going to be issuing some guidelines in the near future. Joseph, did you want to add anything to David's comments?
Yeah, I did. It comes down to the substance of the transaction. Who actually made the sale? Was it the individual or was it the corporation? It'd be difficult to argue that it was the PREC that made the sale because it wasn't in existence. So CRA would likely challenge any sales that were consummated prior to the PREC being incorporated and that are later brought in. So you could face a challenge. But again, each situation is fact dependent. And if you got the paper trail to support that really it was the PREC that made the sale, that potentially you do have an ability to argue that potentially that revenue should be recognized in the PREC.
But Tim, one issue that I think we would really urge here is caution, right? In this sort of field, especially because RICO is going to be releasing some guidance in the near future.
Yeah, for sure. Look, this has been over 10 years in the making, right? This has been a realtor ask for a long, long time because a lot of hard work from our President Sean Morrison and realtors around the province and our team. We were successful. And it's exciting because it's going to help our realtors a lot if it's right for them at the right time. And there's a tremendous amount of tools that I walked through earlier on in the presentation. But it's a new animal, right? It's going to take some getting used to. So I will say one more time, make sure that you talk to your lawyer, your tax advisor, your accountant, for sure. There'll be some more information coming out, as Matt just mentioned, through RICO. And I want to add here too, Matt, so not only should, be cautious and make smart decisions, but I want to say it's been great working with RICO. I think that RICO has been a very good partner with this. We've been talking to them regularly. They helped us out a lot in going hand in hand to the ministry to reduce the red tape burden, make sure you don't have extra filing fees. Like realtors in the provinces, they've got to register separately. There's licensing fees. There's a certain name they have to use. The amount of tax advantages that we got for realtors, the lower level of red tape, the fewer fees and all that kind of stuff, that's a huge victory. And it was really good working with RICO. So I want to commend Michael Beard and Joe Riche and the team at RICO as well. We got this because we had a good partnership here and went to government.
Awesome. Thank you, Tim. Okay, next question is about teams, and it's from a past president, actually, of AREA, Mr. Brian Succo. Brian, it's good to see you on this morning. So I'm going to throw this one to Joseph and to David. Brian's question is, for a realtor that is operating a team, how does it work with their team members? Will the team members be part of the corporation, or are they all separate individual entities? And just before you gentlemen weigh in, I would just add an addition to this, because it is coming up quite a bit through the Q&A section. A lot of people wondering about husband and wife teams and how that would work in the new reality. So David, why don't we start with you?
Sure. So firstly, the concept of a PREC is it's really one controlling individual who controls that PREC. So certainly, even if you are a husband and wife, the regulations and the legislation don't permit you to have one joint PREC. Okay, that's very clear. But however, frankly, if what you're looking for is tax advantages, having two separate PRECs, or 3 or 4 if you're working in a team, or 5 or 6 in a team, probably offers some advantages. And why don't I turn that over to Joe to talk about that?
Yeah, I mean, generally speaking, if each corporation is incorporated, they all get to benefit from the small business deduction. And what that is the first $500,000 of taxable income inside a corporation being taxed at that lower rate. Now, assuming these individuals aren't related to each other or associated for income tax purposes, each corporation that's incorporated can potentially be able to claim its own small business deduction. So it's very powerful if these entities were incorporated individually.
Yeah, it's an important point. And I think that the critical piece here is, with respect to teams, that sole registered and ownership piece is sort of critical. So I think the thrust of the question is, can I take income from my team members and funnel it through my corporation? And the answer to that question, David, is no, right?
Yeah, you can't have a single PREC for all of your team members, assuming your team members are also realtors. That doesn't mean you can't continue to work in teams, because each of your PRECs, or each of you individually, can enter into arrangements with each other.
Right. And Joseph, any final comments from you on that?
Yeah, I mean, you just got to be mindful. I mean, if we go down the route where all these individuals are incorporating companies, the small business deduction rules get really complicated. And if there's cross fees going between companies, it could jeopardize, in some instances, the potential claim for the small business deduction. So I highly recommend you speak to your tax advisor just to make sure that you do qualify for those small business deductions.
Awesome. Excellent advice. Thank you. Okay, the next question is from Alain Robert, and it's about rental properties in the PREC. So the first question is, can a PREC buy and own rental properties? The regulation seems to say no, since trading is not allowed. David, can you clarify that, please?
So the issue is not about trading. The issue is about owning and operating. So if the corporation buys the property as an investment, that is a permitted activity. It can't receive compensation from itself, in the transaction, unless it is actually carried out by another realtor. So that's the compensation side of it, is different than the simple ownership and using it for investment purposes question.
Great. And then Joseph, anything to add to that?
Yeah, from an income tax perspective, whatever cash is available in the corporation to invest, it could invest in whatever property it wants, as long as it's not a personal use property. And generally speaking, you're going to have more buying power in a corporation because the tax rate is so low. You just got to be mindful. As soon as you introduce passive income inside a business that earns active income, you could potentially lose access to the small business deduction. So you would want to monitor the level of passive income in your corporation, and definitely notify your tax advisor if you're planning on earning a passive income in your PREC.
Okay. Alain also asks another question that's coming up quite regularly in the Q&A. It's about holding corporations. David, I'll start with you on this one. His question is, can a holding company own shares in a PREC? And if so, does it also have to register as a PREC, or can it be a regular corporation with only family members as shareholders. So a lot to dissect there. But David, can you just talk a little bit about holding corporations? Because I know that's a big issue that we've dealt with throughout the consultation.
Yes, holding corporations are actually one of the ways in which that issue that Joe was just really talking about is partially resolved. In other words, they're another tool in allowing you to take advantage of all of the tax opportunities that exist. Holding corporations are not explicitly provided for in the regulations. You are required to, as the controlling shareholder, to own the equity shares of the PREC directly or indirectly, and we interpret indirectly to mean you can do it through a holding corporation. But that holding corporation has to be, and this is fairly clear, controlled in exactly the same way as the PREC. So you would not be able to have other shareholders owning the equity shares of that holding corporation.
Well, thank you, David. And Joseph, anything to add to that?
Yeah, I mean, one of the main benefits from interposing a holding company between yourself as a shareholder and the PREC is the ability to asset protect, the retained earnings inside the company. So the PREC can pay potentially a tax-free intercorporate dividend to the holding company, and then the holding company can lend back that money to the PREC on a secured basis. And what you've essentially done there is secured that value that you've extracted. So very powerful.
Great. Okay, thank you, gentlemen. That's excellent advice and feedback. Okay, next question, I'll throw to Tim, and this one is on, Tim, the agreement between the PREC and the brokerage and whether or not REA is going to be bringing something forward. This question is, part of the regulation calls for an agreement between the brokerage PREC shareholder. Has REA created a standard form for this?
So we thought about that a lot because we want to be as helpful as possible. Once we won the victory to allow PRECs, how can we ensure the smooth transition for members across Ontario? But ultimately, we thought that'd be too difficult to do. There may be different situations depending on your business arrangements. Different brokerages may want to take different approaches. So what we're going to do, we're putting a kit together. They'll have the important information there. We're making sure we're aligned with RICO and the information is clear to all of our members. And that will be posted at our website. Again, I said it earlier, but aria.com/PRECs with an S on the end, aria.com/PRECs. So the resources will be there, and that will help you form these agreements. But the actual text we decided not to do. We just thought that would be too difficult. I think it'll still be very helpful. And I know, Matt, we got a ton of questions here, and we'll also be posting an FAQ on the questions that we don't get to today, as well as the high-level ones that are common. So stay tuned for that. It'll be posted on the website, just like this video that you could share with colleagues who couldn't tune in live today.
Yeah, Tim, 665 questions.
Well, how far did we get so far?
I think we're about 5 down and 660 to go. So, okay, next question will go back to David and Joseph on. It's from Anu Joshi, and they ask, can you please discuss the difference between equity shares versus non-voting shares? Can you just maybe elaborate on those points? David, we'll start with you.
I think the terms are actually not defined except to be exclusive of each other in the regulation. So this will be something that I think your lawyer and your accountant will probably need to advise you on about how to best do that in your circumstances. But in principle, the idea is that the non-equity shares, which the family members can own, cannot be used to make any decisions or to control the activity of the PREC. That's the basic principle.
Great. And Joseph, anything to add there?
Yeah, again, I mean, more clarity is required on the differences from a legal perspective. But generally speaking, when you think of equity shares, you think of common shares, and potentially when you think of non-equity shares, maybe some sort of pref share. So the only comment that I really have there is the ability to pay dividends on these shares and the quantity of dividends to pay on those shares. So that's something that obviously you'd want to talk to your advisor just to make sure that these shares are entitled to a certain amount of dividends.
Okay, all right, thank you, gentlemen. Next question is from Stead, and Stead wants to know, does a realtor have to take 100% of their commission through their PREC if they have one, or can they earn some personally and some through their PREC? Field that one. Joseph, did you want to start? Maybe David can come in after.
Yeah, so again, it comes down to it's very similar to the first question. So we have to be mindful here of who actually earned the income, right? So if the PRC didn't exist at the time the transaction was consummated, And then from a CRA perspective, it might be challenging to argue that that income relates to the PREC. So you just have to be mindful of the documentation in place, that what supports the transaction. Was it really a transaction between the individual, or was it a transaction between the PREC and the brokerage? So you have to monitor what the documentation says and really follow that to make the determination of where that income should be reported.
And David, anything to add there?
No, the regulation does not regulate this at all, but this is one of the reasons why, for example, when we were asking Tim, are you going to provide any sort of standard form for the agreement between the brokerage and the PREC? It's difficult to do because different people will want different things. This is one example of that somebody might want.
Great. Okay. Thank you, gentlemen. A lot of questions coming in about articles of incorporation and restrictions that need to be added to the articles of incorporation. I think this touches on, to a certain extent, the question that Tim answered around whether or not we'll be creating a standard document, which could help. But gentlemen, do we have any guidance to offer there? Any information we can relay to folks about restrictions that they need to add into their articles of incorporation?
I can say that the regulation itself does not require anything to be explicitly put into the articles of incorporation. We know that it has to be an Ontario corporation, and that you can take existing Ontario corporations and use it for this purpose. And there's even a possibility of using corporations that were incorporated elsewhere and bringing them into the Ontario regime. But there's no requirement. But once again, it's probably something to discuss with your lawyer and/or accountant.
I'll just add to that, Matt, too. I think, what the government did here was they were sort of minimalist in the regulation, which you don't often get from government. They tend to throw reams and reams of red tape out there. So I think Minister Lisa Thompson's minister responsible wanted to make sure that this tool was as flexible as possible. David gave good advice. You may want to do that anyway, but you didn't see, list after list after reporting requirements and such. And I do think that was great. The minister then enables us to focus on the business side, enables you to get going and not have to check off as many boxes as we see in other provinces or other professions.
Absolutely. As you said, Tim, the gold standard right up there with, I think, the doctors in the province.
Absolutely.
Okay. Next question, seeing a lot of activity in the Q&A section of our portal here today about where folks have to be incorporated. So David, maybe you can take this one. Does the PREC have to be incorporated in Ontario, or can it be done federally?
It has to be incorporated in, it has to become incorporated in Ontario is the short answer. As I said, it is possible that if you were already incorporated, you have an existing corporation incorporated somewhere else in Canada, it may be possible to import that into the Ontario regime. So that's a possibility, but it ultimately has to be subject to the Ontario rules.
Yeah. I think a very sort of straightforward, simple answer there. Question about existing corporations, David, and how that transition works, or whether or not it's permitted. It's quite a long question, so I'm just going to sort of paraphrase here. But basically it's saying, I have an existing corporation set up already. Can I transition that over to be my PREC?
Yes, you can, assuming once again it's an Ontario corporation, or that you continue it from somewhere else into Ontario. Then you just simply have to meet all of the regulatory requirements, and then you're fine.
Joseph, anything to add there?
Yeah, so I mean, the only comment that I have is, if you want to proceed that way rather than starting a new company, any history from that existing company is going to be, the skeletons of the new company. So if there is any hidden liabilities, you may want to think about potentially putting a new corporation in place. And also, you have to look at what's in this existing corporation. Is there a lot of passive assets in there that's going to disqualify you from claiming the small business deduction or capital gains exemption? So you kind of holistically have to take a look at the whole thing just to see if it makes sense.
Bottom line is the option's open, right? Like, this was something that we went to bat for. The way this works is government says, okay, we passed legislation, we're going to do this. How should it look? We go in and make the case. So we wanted to give you that option. If you have an existing corporation, to turn that into the PREC. If that works for you, at least you have that option. But as you just heard from Joe and David, depends what's in there. I just feel really good that we're able to achieve a lot of things for our Realtor members that gives them maximum flexibility. Other legislation for other professions tends to be more of a straitjacket.
Yeah, good point, Tim. Tim, I'll throw this next one to you. You talked a little bit about naming of the corporation in your presentation. Can you just go back to that a bit? We've got a few questions in the chat around what are the sort of naming requirements and standards in the rules.
Yeah, again, this was a nice win. I mean, I really liked working with Joe and David, and we looked at other jurisdictions and said, here's things we want to avoid. So in British Columbia, for example, if I were the registrant, I would have to call it the Tim Hudak Real Estate Corporation. We said, you know what, that might not work for all of our members. So you could actually, so we're victorious. So you can call whatever you want, right? You can call the corporation whatever you want, whatever makes sense for you, your branding, your business. We do not have the restriction like they do in BC.
Yeah, good. Another win there. Flexibility with regulation was really one of our overarching principles with this, and we're really proud of where we landed there. Okay, we sort of touched on this at the outset, but I want to come back to it because there's a lot of questions still coming through about husband and wife teams and whether or not they can form one PREC or they should form two. And I think the thrust of the question is basically, can they channel both sources of income into the one PREC as it relates to trading in real estate? So David, did you want to maybe just respond to that directly if we can?
So once again, the idea of a PREC, so you got to step back and understand the concept is nobody can trade in real estate unless they're a registrant. The corporation is the PREC is the exception to that requirement, but it only can exist if it is solely controlled by an existing registrant and not by multiple registrants. So the answer is you can't create a PREC that has two controlling shareholders. If that's the question, can't do it. Would it make some sense in certain circumstances where you want to take the income in a certain way? That's probably something you should talk to your lawyer and your accountant about to try and sort of take advantage of whatever opportunities are there. That's still tax efficient though.
Yeah, and Joseph, anything to add on there?
Yeah, I mean, I would say is if both spouses are in the same line of business, it probably does make sense for each of them to have their own PREC because you're going to get access to that small business deduction twice, as long as there's no cross fees between the entities. So again, talk to your tax advisor, see if it makes sense for you.
Yeah. A few questions about the recent changes the federal government made around restricting the ability for professionals to income split with spouses and children. David and Joseph, can you guys just elaborate on that a little bit and sort of expand on where the federal government sort of settled on with respect to the updated rules? David, do you want to start?
It's probably actually better if Joe starts on this one. This is a tax question.
Yeah, so I mean, there has been some limitations on income splitting that were announced by the federal government maybe about 3 years ago. So generally speaking, if you have an active member of your family who's actively involved in the business, okay, on an average of 20 hours per week, which is a bright line test that the government put in there, then if that individual family member is a shareholder, a non-equity shareholder, then potentially there's an ability to split income with that individual through dividend income, okay? But one of the caveats is he has to be actively engaged. He or she has to be actively engaged in the business, okay? So what does that mean? An employee of the business doing something, all right? Again, it's very fact specific. The rules are really complicated. I strongly suggest you speak with your tax advisor in order to ensure that you do achieve the benefit of income splitting. Because if you're offside with these rules, what happens is that split income becomes income at the highest tax level for that individual, and you haven't really achieved anything.
Go ahead, David.
But when you go talk to them, explore a couple of options. So for example, if you are over 65, there is a special rule that applies to that potentially allows you to distribute income to your spouse. So that might be something to explore with your tax advisor. Another one is if the other family members have contributed in some other way, and that's a very amorphous sort of concept here, but it allows for some flexibility. Once again, you need to talk to your tax advisor about taking advantage of those options.
Okay, thank you, gentlemen. Tim, next question is for you. It's about RICO and the notice that these new PRECs have to provide to RICO. Could you just maybe expand on that a little bit? And I know that there's sort of an interim measure and then there's a long-term sort of vision for what folks will have to do. So just RICO and notice, what do folks have to know?
Yeah, the requirements right now, as I outlined earlier on, are that RICO will need to know the name of the corporation, its address, right? Those are the basics. We were able to achieve a low level of red tape here in reporting requirements compared to other jurisdictions where they made people register with the regulator, made licensing fees, and a whole lot more paperwork at the end of the day. You know, I salute RICO. I think they want to do is make sure this operates transparently, that there's not a lot of hoops that you have to jump through. And at the end of the day, the PREC is really, you know, invisible to the transaction with the consumer and invisible to RICO as well, aside from those two areas. But obviously, they're still going to make sure they enforce anything around ethical obligations, following professional standards, the code of conduct, all that stuff. Absolutely, they're going to key in on that, and they know about the PREC to make sure they can follow through with their main mandate.
Yeah, and just some basic information to start, and what we understand is that RICO will require a bit more information through a more formal process at some point in the future. And I think, Tim, you can email, if I'm not mistaken, you can email them in the short term with that basic information that you referenced.
Yeah, exactly. That's good to see too. You can email that. If it changes, you have to notify them within 5 days, but I'm happy to see the email. I hope that they stick with that. I hope we don't have to go back to paper-based. That's just so 2019, I think, Matt.
Yeah, good point there. Okay, question about stocks and investments. So there's kind of two questions on this front. Can money be held within the PREC be used to trade in stocks? So the other question is about stock investment dividends income under PREC. So this is, I guess, the sort of passive income question. So can PRECs be used, money within the PREC be used to trade stocks? David, start with you.
So once again, there's no limitation in the regulations about what else you can do in your PREC. So passive investments, trading in stocks, buying properties, trading in even derivatives or anything else like that is all absolutely possible. Once again, we just going to sound a bit like a repeating record here. Remember that doing so may affect, amongst other things, your lifetime capital gains exemption for that corporation.
Joseph, anything to add there?
Yeah, absolutely. Yeah, so David touched on it right there. So the lifetime capital gains exemption, that's really only available if the shares that you own, the assets, the underlying assets are more than 90% used in an active business. And public company shares don't meet that test. So you have to monitor those levels if you are thinking about selling the shares of your PREC. And also, as soon as your passive income exceeds $50,000, then you can have a potential grind to your small business deduction. So you need to monitor that and talk to your tax advisor.
Okay, I think we're running short on time here. So I'm going to throw this over to Tim as the last question, Tim, and then I think you have some closing remarks after. Questions coming through about next steps with TRESSA and what we can expect there. So this is obviously a big win with the incorporation file, but TRESSA has a lot of components. So folks want to know what's next with TRESSA, and then we'll do some concluding remarks.
Yeah, you bet. So with respect to TRESSA, number one, very excited that legislation passed, and having spent 21 years in the Ontario legislature, passed unanimously. That was awesome to see, and that's a pretty rare thing where members of all four parties support a bill. It will raise our standards to make Ontario a North American leader when it comes to professionalism, when it comes to enforcement. And so once the legislation passed, think about this as kind of like the skeleton. And then there are regulations that put flesh on the bones. So those are the detailed rules like we're seeing with PRECs. And at OREA, our board decided to prioritize personal real estate corporations and advertising changes. The minister, Lisa Thompson, agreed. That's why you're seeing those today. We did have a discussion with the minister, and I'll be interviewing her as part of the Realtor speaker series. So you should tune into that. I'll ask her about what's next. But in personal conversations, you know, we seem to be aligned. We want to see a RICO that has more tools to crack down on bad actors. The system was built, has not stood the test of time, and you get as pissed off as I do when you see somebody break the rules and all they get is a slap on the wrist. Modernizing the code of ethics, make it more principle-based as opposed to, you know, a detailed set of boxes to check, more so on the principle side. You'll see those. And specialty certification, something we're pushing for as well. Just like You know, David would have, as a lawyer, where lawyers can practice across Ontario, but will pick specialties. We were successful in getting specialty certification for realtors as well. Now that will take a bit of time, but Matt, I see those as the priorities in the time ahead, and I'll ask that question to the minister directly. So the same crowd hopefully will tune into the Realtor Party series being broadcast and see what she thinks. Okay, is that good enough for that question? I'll wrap up.
Yeah, no, I was just going to say, Tim, in total we had 781 questions coming through.
Man, I thought we were going to get to progress.
Yeah, not going to get to all those today. Encourage folks to go to ria.com/PRECS. You'll see a whole bunch of content there, our guide, our FAQ, recording of this webinar. You can go watch it again after if you need to. Questions were fantastic, and thank you to our team. And Tim, we'll pass over to you for concluding remarks.
Yeah, you bet. So how we're making progress there. We answered about 20 plus questions. So what we'll try to do is, I see that emails are attached to these questions. We will do our best to get you an answer to those questions. We will also take the major ones that come up and do an FAQ. And again, this video, if you want to share it with friends or review it again, the additional assets we're going to put together to help you in considering a PREC, what it all means, some suggestions on how, you know, what's important to have in the three-way agreement between the brokerage, yourself, and the PREC, all of that, aria.com/PRECs, okay, aria.com/PRECs. It will all be resident there. Again, I want to thank all of the realtors across Ontario who rolled up their sleeves, who talked to their MPP directly, who sent in emails, who did social media. I'm telling you, that made a huge difference. We've been fighting this battle for more than a decade. It was that push that helped get this to the top of the hill. And never forget, the MPPs, mayors, they respect you. They see how active you are in the community. They see you sponsoring every event, from the local school picnic to the food bank to kids soccer. They see how active you are in the community. Never hesitate to talk about the issues. This is a clear example of that working in space. Okay, aria.com/PRECs information. I want to thank you very much. Joe Pagliaroli from Tax Partner KPMG. Joe, thank you so much for being part of this, your answers today. And of course, David Tang, partner at Miller Thompson. David, thanks for being such a part of the team that helped get this win. And Joe and David answering the questions here today. Folks, thank you very much for joining us, and wish everybody who's watching live a happy Thanksgiving, especially in these circumstances. Thank you so much.